Hi, this is Alvin from Dr. Wealth, and Alibaba is one of the most watched Chinese company out there. And if you are investing in China, it is very high chance that you have Alibaba in your portfolio. So Alibaba just released their results, and I'm here in this video to explain or analyze for you what I think about the Alibaba result full year 2022 as well as the last quarter of FY22 results. So let's take a look. And the usual disclaimer, pause and read it if you need to. The first thing is that we need to understand what are the revenue segments that Alibaba have, because over the years Alibaba has expanded the number of business operations. You know, they started off with retail e-commerce, then after that they went on to even international, right? Quite a lot of platforms like Lazada in Southeast Asia, right? So they extend beyond just China alone. And even in China, they went physical stores, right? Buying Sunat, the kind of starting the fresh hippo kind of supermarkets, and they went to those groceries space. And not only that, they also have the kind of local services such as food delivery, as well as even a map app. And they do logistics, and they also have cloud businesses. Okay, so you can see that over the years they really have expanded their business, and now it is a monster by itself. And it's important to know what kind of business contribute to the revenue of Alibaba. So the biggest revenue contributor is still from their China core commerce, which is the Taobao, Tianmao, this kind of retail e-commerce platforms, right? So it forms 37% of the revenue in FY22. Then the second largest contributor to the revenue is the supermarkets, okay, whether is it Sunat, the Tmall supermarket, as well as Fresh Hippo. So these are the three. And then the third one would be the cloud business, right? That consists of Alibaba Cloud as well as the TikTok, which is like a communication platform for businesses. Okay, and then the rest are generally smaller, 5% or less, right? So the three big components, let's go through again. First is the e-commerce platform, the retail side. And then the second one is the direct sales segment, which is essentially the supermarkets. And then the third one is Alibaba Cloud, right? So these are what it looks like. Even the international retail segment is only contributing 5% of the revenue, okay? So let's look at the growth, right? Because Alibaba is still considered a growth stock, even though the share price has been beaten down quite a lot, that some people start to think that Alibaba is a value stock. But most importantly, it is still a growth stock, right? And even you listen to the management commentaries and their analyst briefing, you will realize that they are still focused a lot on growth, right? They want to find new areas of growth. They want to build a bigger company from where they are, even though they are very large at this point in time. So let's look at two parts of it, right? So one is the 3 months, which means the last quarter of 2022. FY 2022, right? So their FY ends on March, okay, rather than December. And then we look at the full year, right? So these are the two that we need to look at, okay? Maybe let's start from the full year, right? Let's look at big picture first. So the full year-on-year total revenue growth is 19%. So that is pretty decent, I would say, for a large company like Alibaba. Of course, right? If they can grow at 20+%, 30+%, like what they used to, is better. But 19% is not too shabby, right? Considering there were a lot of clampdowns on this technology company in China, they still managed to end the FY with a 19% growth. So it is still decent, okay? But if we look at the last quarter of their FY 2022, they only managed to grow 9% from a year ago. Okay, that means Q4 of 2021 compared to Q4 of 2022, they only grow 9%. That is like a half of the speed of the full year, right? So which essentially it also means that this quarter 4 has dragged down the growth rate. If this quarter 4 growth rate were faster, Alibaba could have ended the year with more than 20% growth rate. So Q4 looks pretty slow, right? And if you look at every other segment, whether is it their commerce segment, whether is it their international commerce, all the growth have slowed down, except two areas, which is the local consumer services. Okay, there's some acceleration over here, and then the other one would be, let me see, the other one would be, no, actually there's only one, which is their local consumer services. Even their cloud business have slowed down, right? They used to, the full year is 23%. We take that as a benchmark, and then last quarter was 12%. So only the local consumer services were doing well as compared to the other segments, right? So definitely the year-on-year growth looks better than Q4. Okay, so the question is this the growth rate, the Q4 growth rate, is it the way forward for Alibaba? If it is, then you know the growth has really slowed down a lot. Okay, but the excuse, or maybe the reason, okay, I think it's a valid excuse, right? Depends on how you want to see it. That they used was that because, you know, China has gone into a lockdown in the month of March, and that coincided with the reporting cycle. So they're saying that this is not a usual quarter because they lost like almost a month in that quarter, and that's why the growth has slowed down a lot. So it is, they believe it's not representative of their business going forward. So which means that if Alibaba, if the lockdown in China is all cleared, you know, when China go back to normalcy, it is very high chance that Alibaba growth will do better than what we've seen in Q4, right? So that is what the management have said. So we have to still see what happens in the future quarters, okay? And of course, that is taken in conjunction with whether China has lifted the lockdowns in a lot of those cities at this moment in time. And the next thing that we'll look at is their profits, right? Because Alibaba is a profitable company, and if their growth is slowing, then margins must be better, right? So it must balance in this way, right? It cannot be the growth is slow and then the profits margins are even worse, right? So that is not a good sign. But let's take a look, okay? Let's look at the last quarter earnings first, right? You'll be quite shocked to see that, oh, the last quarter they ended with a big loss, right? Oh, that's even worse than Q4 in 2021, right? Which was also a loss, okay? And that's like almost more than 2 times loss. The more than 2 times the loss in 2021 4Q in 2022 4Q. Okay, so that big jump of loss would make people jump up and see, oh no, this Alibaba is not investable, right? Revenue slowed down and then they lost a lot of money. Okay, but if we take a look, the income from operations, right? So this is a key figure, and this means that do they generate profits from their core operation, the core businesses? Okay, you can see that in actually 4Q 2022 they did well. There's a $16 billion worth renminbi of income for operations as compared to a loss for, a year ago. Okay, so what contributed to the loss, right? If it's not from their core business, it's actually from all their investment. So you can see there's a big $36 billion loss from investment income, right? So that is itself because Alibaba does a lot of investment, and you know that the stock market has not been doing well lately, and all these losses has been reflected in their income statement, right? And another big one is this, right? Another $20 billion renminbi. That is from their investee companies, right? So without this loss, the net, they will end the year with a net profit actually, right? And these are not a big concern because these are non-cash. Okay? It is not real cash that is being lost. It is just the paper value of their investments have decreased tremendously due to the bearish market, which is fine. Right, so that's why I think that this is not a big problem. They, in my view, they actually end up profitable for the rest for the last quarter of 2022. Then the next one is that we stretch throughout the entire year to see how did they do, right? How well did they do? Okay, so if we take a look, they actually end the year profitable as well, right? But we have seen it's not reflected here, but I just verbally tell you their profits have about halved, okay, compared to 2021. And what are some of the culprits that we can identify? So there were 3 things that caused the margin to go down. Okay, besides the one we talked about, right? Besides the investment losses, okay, there were others that caused a slight increase to their operating costs. Okay, so the first one is their cost of revenue has went up. Okay, and then the management explanation is that it is due to the Sun Art consolidation, because Sun Art previously was not part of Alibaba. Okay, but Alibaba went to acquire Sun Art, and now it become a subsidiary of Alibaba, and that means that all their revenue, their cost is all combined with Alibaba. And Sun Art profitability or the margins is not as good as Alibaba's so-called e-commerce platform, and that's why that cost of revenue actually increased. Okay, it reflected in the financial statements of Alibaba. And they also mentioned there is an increased logistic cost of Tao Cai Cai. Okay, so that is another one, probably because of the fuel costs that went up due to inflation, and that's how the cost of revenue actually has went up. Okay, it actually went up by 4%. Right? It's not a big jump, not like this investment loss. These are very big numbers, right? It's almost like a minus 200% change. Okay, so this is still considered a small change, right? So that's why I say that actually their core operations are fine, right? But there are some of these three parts that the core operation costs or expenses have gone up. Second is the sales and marketing cost. It went up by 3%. Again, it's not a big number. The second one, then the management explained, is to acquire users for Taobao Deal, Taobao, Lazada, and Ele.me. So these are it is necessary, right? Because it is a reflection of competition as well, right? Increasing competition, they need to compete for customers' attention, and that's how they need to do more marketing. Okay, so I think this is no choice, and in fact, they do more marketing and sales, their revenue will go up, right? So this is actually a good expense in my view. Okay, and it's not extensive. It's just a 3% rise in the expenses. And then the third one is impairment of goodwill. Right? Unlike 2021, there was no impairment, but in 2022 there was an impairment of $25 billion. Okay, and this impairment came from the digital and media entertainment segment from previous quarter, not from Q4. Okay, so the digital and entertainment segment is the Youku and Alibaba Pictures, right? So these two are not actually doing well. Okay, but again, these are not a big concern because are non-cash and one-time kind of impairment. You never see it again. Okay, unless there are more of the value to be impaired. Otherwise, this is it already. Okay, so these are how the numbers look like. Again, it is just a 3% increase in the impairment, right? So it's not a very big kind of difference to talk about. So I think that it is not something that investors should worry. Okay, and again, all these investment losses are temporary in nature, paper value in nature. Their core operations is actually doing fine, right? So that is most important thing to know. And in conclusion, so just understand that the yearly growth is still decent at 19% growth, okay, revenue, but the 4Q growth has slowed. It has a valid reason because of the COVID lockdown, so which means that you give them chance and you see that after COVID lockdown is done, whether the growth accelerate back to normalcy again. Okay, so that is something that we still have to see. Then the next thing is that the overall results is like I feel that it isn't that bad. Okay, as why the key thing is that the core operations are still intact. There is nothing that investors should worry about Alibaba's core business, which originally I think a lot of people are fearful due to all the clampdowns and whether their profitability will be affected and things like that, right? In fact, even the Ant Group investment has grown in value. Okay, their profits have grown. Okay, so the core operations with Alibaba really has been solid, I would say, right? Not really impacted by the regulations. Okay, so the results weren't disappointing, and probably because a lot of people are bearish about Alibaba, given all the negative news about it, somehow this set of results exceeded the expectation. Okay, because original expectations were low, so it was easy to exceed it. It's not that the results were fantastic, right? Just that it is not impacted. Okay, let me put it that way, right? So that is why I think the share price have rebounded favorably, 10+% in a day after these results were being released. That said, I don't think Alibaba is out of the woods. It has really came down a lot in terms of share price, and is more than 50% down from the highs. And it will take a lot more good news in the coming quarters for Alibaba to slowly get back on track with their share price recovery, right? Otherwise, it is a good start. I think these FY22 results have been encouraging, and probably that changed the expectation a bit, okay, for some of the investors out there that caused the share price to go up. So we hope to see more good results from future quarters, and we'll see and analyze when they come about in this channel as well. So remember to subscribe, remember to like this video. So once you subscribe, you'll get an alert when I do such videos, so you won't miss any updates on Alibaba as with other stocks as well, right? This is Alvin. I'll see you around. Goodbye.